Jones. Robert has over 25 years experience in business leadership, and recently running a national firm with across the 3 provinces, 140 over 140 employees. And I know, Robert, I've seen you in action over the years, where you've taken a company, very dysfunctional company, and turned into a very profitable company. Thank you so much for joining me in a call today.
Thank you for having me, Gurmeet.
Okay, so how you holding up in a COVID, Robert? How's the family and how you doing?
All very happy and healthy. Thank you for asking. We've remained clear of COVID, touch wood. So it's definitely been some strange times. My son went off to university this year, finished high school this year, all under COVID. It's been a little strange, but we're adapting.
Good stuff. So, before you got into, Portage M&M Advisory, so if you walk us through the journey, how you, get started. I know you spent a lot of time in the U.S. before you came to Canada. If you just walk us through, give us a little bit of background, how you got to where you are right now, Robert.
For sure. So I began my career in the U.S. I was born in the U.S. and I married a Canadian in 2001.
Nice.
And moved to Canada. So I like to tease her that I was a mail order husband, but
was it a part of the deal that when you get married, you got to move to Canada?
Actually, believe it or not, she was going to move to the U.S., but the process is taking so long,
Gotcha.
and we knew it was only temporary anyway.
Gotcha.
It's hard to take a woman away from her sister and mother.
Yeah.
So we knew we would end up in Canada at some point. So rather than have a short detour in the U.S., we decided that I moved straight to Canada. So, yeah, it was pretty interesting. So I began my career representing a company called Space Saver Corporation. They're a manufacturer of steel shelving systems for commercial environments. And I had progressed to a position of director of dealer sales when I had moved to Canada. And then after leaving the U.S. company to move to Canada, I joined another Space Saver dealer, a representative here in the Toronto area. At the time, they were under a different name, but we eventually changed the name to Space Saver Solutions. I started there as a sales rep, and then over the years moved into various positions, and ending up as the president of Space Saver Solutions.
Wow.
And then that's when you and I met. That was sort of around 2013, I think, somewhere in that range.
I think so. Yeah. Yep.
And we had grown the company. So when I joined the company, we were about 7 employees and about $3 million in sales. And then over the years, we grew the business to about 35 employees and 10 million in sales. So we had grown exponentially the company. And during that time, we were growing by acquisition as well. So we ultimately bought 6 different companies, the last of which was a company it was called Critical Control Solutions, but we rebranded it as Nimble Information Strategies, Inc., which you were instrumental in helping us in that acquisition and beyond, sort of integrating that company. So we went from 35 employees to 110 employees overnight.
Wow.
We went from 1 location, 1 office to 4. Again, the size of the company, dollar-wise, was actually a little less than the other side of the business, but it was a different type of business, so it's much more labor-intensive. So we had a lot more people.
A lot more service than product, I guess, where you guys were doing.
That's right. Yeah. So one was more software and service, the Nimble Information Strategies. The other was a product. So generally speaking, the product sales and installation is less labor-intensive, and whereas the services and software, there was a lot of manual labor required. So we integrated the business, and I remained as president of both companies for some time. And as I said, we had acquired 6 businesses over that time. over my career with Space Saver Solutions and Nimble. And I always enjoyed the process. So when my time sort of came to an end, I'd reached a bit of a glass ceiling at the previous employers. I decided to go out on my own, and one thing I noticed in the market that we were buying businesses is that the representation by the brokers, I guess, if you will, in that market, were just not very good. And I did a little bit of research, and I came to understand that there's a segment of the market that's too big for the real estate brokers and real estate agents who sell businesses, and too small for the larger mergers and acquisitions, investment banks. So there's a segment of the market that sort of gets ignored, and that's where we focus. So we figured that we call it the lower middle market, which is generally described as companies with enterprise value between $2 and $50 million. We tend to gravitate towards the bottom end of that range. That's where the businesses really need the most help.
I see.
So that's why I got into the business, is I saw an opportunity, and also demographically the tides were shifting. The baby boomers were in full swing of retirement age, and there was a lot of press about this, what they called this gray tsunami that was coming, was the transition of businesses from the baby boomers.
Gotcha. So what do you thought, Robert? Is that the company's not presented right, or is it just companies not operationally running right, or where do you think that the biggest challenges for these people who trying to turn around the businesses?
So what I thought when I got into the business was they weren't being presented properly, which is true. That's where most of the visible problems with the industry are. But what I learned as I got deeper in to the business was that a lot of these businesses are not managed professionally. So they start out generally as just a way to make a living. Starts a business as a job, essentially. They build it up into sometimes very successful companies, doing tens of millions of dollars in revenue and making millions of dollars of profit. But they don't have professional management in place. So their management structure can be lacking. Their reporting information systems are generally lacking. Systems and procedures are lacking. So it makes it very difficult for an acquirer to come in and objectively evaluate a business. You have to do a lot of cleanup to be able to uncover the value in that business. And I think the reason that these businesses are ignored by the bigger investment banks and M&A firms is that it's too much work. It's a lot of work. It's a lot of work to get them positioned to go to market. I'll give you a quick example if I can. We have a business right now that's due to close very soon, like end of this month, beginning of next. We've had the engagement for over 2 years. The client was told by a top accounting firm, so not one of the big four, but just below it. The tier just below, very respected. Most people would recognize the name. Told them that their business wasn't saleable. And this is a business that's doing $25 million in sales, 80 employees, making $3 or $4 million a year. So fortunately for them, their banker referred us and for a second opinion. We got in there and we said, absolutely, this business is saleable, but there's a lot of cleanup to do. There's a lot of work to do. If you're going to get a sophisticated buyer, somebody that's going to have the wherewithal to buy a company of this size, there's a lot of stuff that needs to be cleaned up before we can go to market and before someone is going to be comfortable making this purchase. So that's an example of a company that was ignored by the traditional investment banking community. And it's a shame, because if they would have listened to them, they would have literally walked away from almost $20 million. It's a lot of money. But it's a perfect example of two brothers started the business and in the machine shop world. So they're technicians. They built it up. They got some good customers. They got good employees. They ran their business, but they didn't have inventory control systems and costing systems and management reporting, like getting timely, accurate information on a monthly basis was very difficult, if not impossible. So these types of things are very hard for a buyer to evaluate.
I got you. So is that just a knowledge, Robert? They just a little bit short on the knowledge that they don't know what to do, or is it just too much work or too much hard work that they have to grind in to sort these things out so they can change their valuation of the business? So is it just know-hows, or is it simply just not willing to put the hard work in?
Well, I think at the end of the day, it's a little bit of both. What you'll find, and it's a bit of a catch-22. Because what you'll find with a lot of these business owners is that they are working in the business. So their presence is required for the ongoing success of that business, which leaves them very little time to do what we call as work on the business. So to step back a little bit and think about and intentionally run the business, not let the business run you, which is what happens with most of these people. So there is an inflection point that a lot of businesses just fail to successfully navigate, and that is when should we bring management in that takes care of the day-to-day operations. They're making the decisions on day-to-day operation, and us as the owners, we're looking at the business, setting its direction, making sure that it's in the right place to get to where you want to go, as opposed to making day-to-day decisions. So I think a lot of people know that they should be doing that, but they can't cross that chasm of putting management in place. Some of it's ego. A lot of business owners just are very proud, and they enjoy doing the firefighting in the business. So they're constantly caught up in the day-to-day. And when they remove themselves, they feel kind of useless. And that's not how they built the business. So I think it makes them feel very uncomfortable. And so they don't do it. It's the strangest thing to me. But it's a phenomenon that's very similar to, in everybody's personal life, people that don't have a will, right? So there are very smart people out there, lawyers, for example, who don't have a will.
Not paying attention.
It makes no sense logically, right?
Yeah, from business and as a business owner, I can understand when you're grinding every day in a business, you're so buried in a problem, on a day-to-day stuff. You never have a moment to lift your head up and take look at it, what you're missing, and there's so many blind spots. And I think that's where an expert like you come in from outside. And you can see those blind spots where when I'm burying a problem, I'm trying to run a business on a daily basis. I'm not going to notice a lot of those blind spots. And I think it's a key to find expertise like you guys are, finding out, hey, where's a blind spot? Am I going in the right direction? And just want to check and back to, with somebody else, listen, could you guide me to the right direction and so I'm not missing anything?
Yeah, exactly. Those are great points. And I'll tell you that in a perfect world, we would start our conversations with a business owner 5 years before they're ready to sell.
Wow.
It can take that long to position the business properly. And part of the problem also is there's a lot of information out in the market, out in the ether, that's just not accurate. So business evaluations. I'll give you an example of why a lot of business owners think that they can sell their business anytime they want. And I'll tell you that it's because of people like me. investment bankers calling, prospecting, looking for clients who want to sell their business. You have private equity firms. You have family offices. All of these people are prospecting. They're looking for businesses to buy or businesses to represent, in my case. And they could be getting 2 or 3 of these calls a week. So there is there's a misinterpretation of demand for their business. So because they're getting 3 calls a week, they think that there are people that are interested in their business. But the reality is somebody like me that's calling, I'm interested in the general description of the business, but I don't know what the details are of that business.
Gotcha.
So till I know that, do I even know if it's a sellable company? And the other problem with the way that business owners think about selling a business is they think about it as an event as opposed to a process. And that leads them to one day deciding, okay, I'm going to sell my business.
Yeah, I'm out.
That it's an event, right? It could be a bad week, a bad month. It could be a bad day. Who knows? It could be something that forces them from the health perspective, them or one of their family members, or just an epiphany that, you know what, I only have so much time left on this earth. Like, I don't want to spend the rest of it doing this. And unfortunately, those are the cases that in most of the time is those businesses haven't been prepared for sale, and they're going to take a discount for their business. It's not going to be worth as much because the work that's needed to transition that business to a new owner hasn't been done. And if it's not being done, that means that the person who buys it has to do that work. And there's risk in that. And whenever there's risk, the business is not worth as much.
Gotcha.
Right? So the process of preparing a business for sale is all about minimizing the risk of transferring that business to a new owner.
I got you. So the person who's taking over the business, they not inheriting the risk that that business has already. They inheriting so they can put a higher value on a business.
That's right. If they've done the work, they've put a management team in place. They don't have the owner dependence, we call it. They don't have customer dependence, which is another big red flag. So if 40% of your business is made up from one customer, or 60% of your business is 3 customers, that's very risky, right? I mean, there are people that'll come in and they'll say, well, what happens if you lose? Well, we've had that customer for 20 years. Well, you don't know what's going to happen. It just poses risk. So that people are going to figure out a way to minimize or mitigate that risk.
So that's a great point, Robert. You mentioned that, how does that play in era of COVID-19? There's a lot of those risks came in a play that people were hoping that they're never going to see this kind of risk. Who knew that COVID is going to shut down complete economy, or they're going to shut down a different line of businesses. So how do you see that? Did you see those risks play out? Because I see a lot of companies, buy in or buy out, during this COVID time. Is that, you think that's part of it, or is it simply just people trying to take look for more opportunities, or what do you think that the market changing in a business?
Well, what I think is there are sort of 2 camps here. One that is sort of temporarily impacted by COVID. Those are sort of government interruptions that really just paralyzed the company for a few months, and then they were able to get back up and running, and now they're back to pre-COVID numbers and they're doing well. The industry they're in general was not impacted dramatically by COVID. It was more of a shock response from the pandemic. Then there are industries that are gonna, there's no way around it. There's going to be a long, slow recovery. Travel and tourism. Travel and tourism is not going to recover for years. It's going to take years for them to get back to pre-COVID numbers. There's nothing that they can do to mitigate that. I mean, that is, there's very little that they can do. What can airlines do right now to increase travel? Nothing, right? There's nothing they can do. What can hotels do to get more people in there? Nothing, right? There's some industries that are really impacted. And then there are the ones that what we like to say is, it's not my saying. I don't want to take credit for this, but I think this is great. It's, the COVID was like the tide going out, and you can see who's wearing a bathing suit. So people at the beach, the tide's going out, you can see who's wearing a bathing suit. And it's a stress test. So and I'm sure you've seen this too, a lot of businesses reacted really well. They hunkered down, they adapted. I had a retail client who had 4 locations. We were about a month away from going to market with his business. And COVID hit. And so it demolished his business, retail. This is, in the early days, everything was shut down. He didn't know what he was going to do. He had rent for 4 locations. So what he started doing right away is he knew that his web presence was very weak. So he started building a website, and he started reaching out to his clients. So he had good client lists. He had email addresses. He had some good fundamental assets that he wasn't taking advantage of before. But then he hunkered down and he changed his model. So he closed 2 of the stores.
Smart.
But the reason he closed those 2 stores was because the COVID forced him to look at the numbers, and he realized that he wasn't making any money at those 2 stores. He was still making most of his money from the 2 flagship stores, and he wasn't making any money at those stores. And it was somehow being clouded by high seas, right? Everybody was doing okay, and he was getting cash flow. So for him, it made sense. But then you take a hard look at it. You hunker down. You close the 2 stores. You put your presence on the web. You start reaching out, doing different things with customers, and he's done okay, right? He's not back to pre-COVID, but he's surviving and doing fairly well under the circumstances.
Excellent.
Then we have other clients who just were paralyzed. And they didn't do anything. I mean, some of them didn't apply for the government support, although they were very eligible for the stuff. They didn't know what to do. They just didn't do anything.
Wow.
And those people are going to have a hard time coming back. It's going to be difficult for them.
Nice.
So what we're seeing is that this was a great stress test for businesses. You really saw who had a good business model or were adaptable to changing their business model to survive. And then those that had weak business models, tight margins, not paying close attention to your expenses, all those types of things that business owners should be paying attention to, but they're not. And again, high seas floats all boats, right? So when the is good and sales are good, you have cash flow coming in, it can hide a lot of problems in your business.
You got it. So the example you just used, Robert, somebody has 4 stores, 2 were doing well, 2 were not doing well, but he was okay to get by because, he was offsetting the profit from a, too good store for not too good store. You think that kind of luxury is coming back after COVID, even we pass the COVID, you think that, that model may have worked before COVID, but how do you see after COVID? You think we will get to the point where we can have that kind of luxury?
I'm really on the fence with this, and I'll tell you why. One thing that's very hard to predict, in my opinion, is human behavior. And if you look at just the data, you would automatically say, retail is dead. Like it's going to be next to impossible to survive in retail ever. And there's no question that retail is changing dramatically. But I still think there's a place for the small shop owner. And I think there might be more of a sentiment from people after COVID to go back to supporting small local businesses. Because I think we've gotten a lot of attention over COVID about closing the small businesses and leaving the big box stores open. Already a big problem with the big box competing with the small local shop owners. And now you have the government aiding and abetting this, this imbalance to the big guys. And I think people are realizing the importance of having these small shops around. So do I think it's completely dead? No. Do I think you're going to have to be a little bit more aggressive in your business model and be a little more diversified, having a web presence, like not just having a storefront, a bricks and mortar store, but make sure you have a web presence. Make sure you can deliver your goods to a broader audience. I think those are all good business principles before COVID, but I think this certainly highlighted it.
I got you. With all this changing happening in a market, Robert, with the retail or with the, changing, diversifying either retail space or internet space, whatever they're doing, is that changing how business gets evaluated in your side of, line of business or how people look at that? Hey, I'm going to put a more value on it because it's diversified or because it has a both presence or just only have one presence. How does that change from your industry that how people look at business and value those businesses?
That's a great question. So pre-COVID, all of it would have made sense that if we were to look at a business that had a storefront, that had a great web presence and good balance of online sales versus storefront sales, they would get a lot of credit for that.
Yeah.
That would almost be evaluated as two separate businesses. So somebody can place a higher value on maybe the web business and less of a value on the storefront business. However, since COVID, the reality is that there's more uncertainty than ever. So having diversified income streams is good, but people still don't know what's going to happen. So what is going to happen with retail? So what we're finding is when it comes to valuing a business these days, buyers are still very active, by the way. Just as an overall comment about the market, our business, we've been very busy throughout COVID, and it's not been distressed businesses. That's not something we even focus on. These are businesses that were at the point of ready to sell, or they were at that stage regardless. So they've remained. The buyers are still out there. In fact, there's been an increase in buyers that we've noticed over the last 6 months. The activity in the buyers has been very high. But what we're seeing is that deals are moving a lot slower. And the reason is putting a value on these companies. So when you come into a company that was doing really well in 2019, you started off 2020 well, and then COVID hits. So how do you value that? Like, what credit do you give to 2019 revenue when the world has seemingly changed forever? Like, can you give any credibility to the financial statements pre-2019 or pre-2020? I don't know. It's a case by case basis. Unfortunately, there's no broad answer here because every business has to be taken on a case by case basis. And one of the things that we're doing is we're just really trying to get as granular as possible and tracking sales on a monthly basis now. So if their sales in January, February were strong, and then March, April, May, they were dismal, and then they started coming back in June, July, August, and September, they're back to 2019 numbers on a monthly basis, then we feel we can ignore the COVID impact of those 6 months. And we can then rely on the 2019 numbers as a reasonable expectation of how things are going to continue into 2021. However, when a buyer is coming to the table, that's not good enough for them. There's still too much uncertainty out there. So the deal structure seems to be changing a lot. So I'll go into that briefly. So deal structure prior to COVID generally consisted of 3 components. There was a bank financing, usually for 60 to 70%. Then there is buyer's equity. So that's usually around 20%. And then the balance is usually held by the seller as seller financing or a VTB. So that would be a very traditional and typical structure of a deal prior to COVID-19. After COVID-19, the banks are a little more conservative, so they might not be coming in with quite as much. The buyers are coming in with around the same amount of equity. The sellers are holding bigger VTBs. But the component that wasn't really existent before COVID-19 was an earnout. And the difference between seller financing and an earnout is seller financing is the buyer is promising to pay the seller X amount of dollars over X amount of years. That is a promissory note. That's a promise, I'm going to pay you this money. An earnout is a mechanism that allows the seller to make predictions about the future sales. So promising to the buyer that sales will get back to this level, and the earnout is tied to the performance of the company. So if the company is projected to have 10% growth next year, and it hits that number, then whatever arrangement is made, the buyer then pays the seller that amount. However, if they only come up with 2% growth, then the earnout is not paid, or it's paid at a different scale. It's not paid at the same amount. It's more of a shared risk model, so that the buyers, because of the uncertainty of the future, they want some confidence that the business is going to return to where it was before. If they're going to pay that full value for the business, they want to know that it's going to reach a certain level of sales. And the only way to do that and get a deal done now is to say, sure, we'll pay you that amount for the business, but the business has to hit this mark. If it doesn't, then this is what we'll pay you.
I see. So how easy it is to predict that earnout, Robert, during this time like a COVID, what people did in sales in 2020, and how 2020 is going to shape out. How do you predict the earnout for people? How do they put a percentage on it?
Yeah, it's not easy. It's so the way so prior to COVID, by the way, we would have, as an advisor for a seller, we would have very rarely, if ever, suggested that the seller agree to an earnout. And the reason is earnouts happen when you turn the business over to somebody else. So you're no longer in control of that business. So you're relying on someone else to run the business
and have the same number
better, and then to meet the numbers. And the buyer can play all kinds of games with the numbers. Like, you have to be very careful with earnouts. They're a great tool to close a value gap if they're structured properly, and if there's good trust between the parties and all that good stuff. So prior to COVID, we would have very rarely, only in an instant where a company was experiencing super high growth. And if you're experiencing super high growth, again, that's as a buyer, you're like, is that going to keep up? Like, can you continue that rate of growth? And if the seller's confident that it will, then they can enter into an earnout agreement. And those are rare cases, and they're also usually very lucrative deals. But we would say to a seller at that point, you have to be happy with what cash you've received, because the earnout is great. That it's not that you're going to get it. So, but nowadays, it's almost required to get a deal done because of so much uncertainty in the market. So it's very difficult to predict. We use, like I said, we're sort of getting as granular as possible, trying to compare to previous year time periods. We're getting down to the month. How are they doing compared to this same month in 2019? And then see where they're trending. And then it's a negotiation. So it goes back and forth, and it's part of the deal structure.
I get you.
That's all.
Yeah, gotcha. So, and there's always, there's, never a perfect time for, preparing a business opportunity. Because somebody's, a business owner, they're thinking either they want to start look for the exit strategy, or they're looking to, position the business, and to manage all the risk. What can they start doing in like now for 2021? What can they, start doing to start preparing themselves? Or they simply just, what kind of action they can take now when the slow time before the whole lockdown is finished end of January? What can they put some work in, for now, so they can, start preparing their business?
Absolutely, and it really has nothing to do with COVID. I mean, a good business before COVID is a good business now, right? Yeah. For the most part, unless they're directly impacted by the industry, which, in some cases that's happened, and there's not really much they can do. But the same advice that I would give pre-COVID would be to manage your owner dependents. So put a team in place that you trust, that can make decisions, that can survive the transfer to a new owner. So they need to have a management team in place, because just think about, we call it a hub and spoke. So if you're the hub of a business and all the major decisions have to come through you do all the quoting for the jobs, you're actually still selling, you're the top sales guy, you're out doing all this stuff. Well, if I remove you from the business, what's left, right? Yeah. All the spokes fall apart. So it's not a sustainable model for a business transfer. It's very different. And I could give you examples of businesses that are that appear to be identical financially, as well as from the surface and the industry, but one could be worthless and one could be worth millions of dollars. And it's all dependent on owner dependence, customer concentration, your systems and procedures, the market that you're in. What market are you in? How what's the future look like for the market? Like printing is in a difficult market. So the commercial printers, but certain segments of that market that are doing very, very well. Stuff like signs and car wrapping, and there's all kinds of sign people and printing people that are doing well. But when you're printing annual reports, or you're just doing regular old offset printing, a lot of that's just been replaced by digital, and it's sort of going away. So we'll look at your industry has an impact on the business salability as well. And you just want to clean up your financials. I mean, financials are the scorecard. So they're not everything. Like I said, I can show you an identical set of financials, the profit, top line sales, profit, and one company could be worthless and one could be worth millions of dollars. And so financials are important. Cleaning up the expenses that are run through the business, making sure that you run it clean. Only business-related expenses are in the business. Making sure that everything is categorized. Making sure that if you have inventory, make sure you're doing proper inventories and applying that to your cost of sales. Just clean up and make it. A good way to think about it is that you're going to have to present this to somebody.
Gotcha.
And when you have to present it to somebody and you have to say, oh, well, that number isn't really that number. You can change that number, and this number, you lose credibility.
Yeah.
So, and having a good accountant makes a difference too. Like if you have it, make sure you're using a CPA, a reputable accountant who does your financials. If you're up north of $10 million in revenue, I would suggest that you, at the very least, get a reviewed statement. So 3 types of financial statements: the compiled, the review, and the audit. And each one of them carries more weight when it comes to evaluating the business. The audit is the highest level. If you're upwards of $10 to $20 million, I would suggest you get audited financial statements. They will cost you some money, but it will get instant credibility from banks and buyers. And again, I would do that for the last few years of your before you want to sell. And again, if you're doing this intentionally, you would have the time to do that. So those are the major points that we look at in making sure that the business is saleable and is in position. There's also some stuff personally that you have to make sure is in order, making sure that you have the right corporate structure to take advantage of tax savings when you sell the business. Making sure if you're gonna sell the shares, you can take advantage of the capital gains exemption. Making sure the corporate share structure is proper, that you can take advantage of that, full advantage of that. You have to talk to a professional to do that. We refer our clients to professionals all the time to do this work at a time. So the tax planning is a big part of it. Who cares what you sell your business for if you don't keep very much of it, right?
Yeah, definitely.
So making sure that your personal financial plan is in order. There's some things that the owners have to do personally to get a business ready to sell. And you know, some people would argue that the psychological preparation for a business owner is half the battle. So like getting straight between your ears that this is something that you're going to do, and preparing yourself for it. And it's funny, it sounds funny, but there are people that the business has been their life for 20 years, 30.
Yeah.
They have no hobbies. They don't do anything outside of the business. They're there 6 or 7 days a week, 10 hours a day. They can't even imagine life without the business, right? Wow. They don't play golf. They don't take vacations. So the thought of them selling their business is very daunting. So if they don't get themselves prepared mentally, and by thinking of things that they're going to do, starting a hobby, start playing golf, start doing something outside of the business, start thinking about travel, start thinking about the things you're going to do afterwards. Because if you don't do that until the moment that you have sold your business and signed on the dotted line, then you're going to get cold feet. And there's a chance you're going to back out of that deal for no logical reason, only because mentally you're not prepared.
So that's going to be that got to be the biggest challenge for people, if just put a head around how mentally I'm going to prepare, and how big is that challenge when you have multiple owners in a business. You can prepare one person mentally, but how about that bringing the whole family on the same boat and trying to prepare everybody else around you?
Yeah, that's another great question, and a really sometimes challenging situation for us as advisors. So just to give you a little idea, when we meet with a potential client, we go through this process with them in great detail before we take them on as a client. And we want to make sure their business is ready to be sold. We want to make sure they're ready to sell. So we will ask them, and they'll tell you, oh yeah, I'm ready. But we ask different questions. We're a little more coy than asking the direct question, because people that have no hobbies outside of work, have no interests outside of work, these are people that are going to have a hard time pulling the trigger when the time comes. And it's a bad reputation that we get if we waste buyers' time with a business owner who is not going to sell. Ultimately, in the end, we make sure they have reasonable expectations on value before we take them to market. We also will go through a lot of those points that we talked about, the owner dependence, and we'll give them some insight about preparing the business for sale. But when there are multiple shareholders in a business, we insist that we talk to all of them. So we make sure we bring them all in and they all go through that process. Or if it's 5 or 6 shareholders that own the business, we'll make sure that there's actually a corporate resolution giving one of them the authority to act on behalf of them in the sale of the business. So you're absolutely right. That is a major challenge when you have a younger owner and a slightly older owner. There's different in life. One of them is definitely not ready, but most business owners have about 90% of their net worth in their business.
Wow.
So if anybody's watching this that is going to be selling their business in the next 10, 15, or 20 years thinking, I don't have to worry about that yet, Start diversifying your assets. You know, get a financial planner. Start taking money and some of your assets out of the business. Buy other assets. Most entrepreneurs have this urge to plow everything back into the business. But what happens is it'd be like saying, I'm going to put all of my stock portfolio in Amazon. That's all I'm going to have is Amazon stock. Yeah. Well, you know, does that really make sense if something's going to go sideways? I mean, things out of your control can reduce the value of Amazon overnight. Same thing with your business. Yeah. You know, COVID. Who predicted this? Yeah. Right. So you don't want to have all of your assets in the business. And I can tell you that the conversation with business owners that have diversified their assets over the years is a much better conversation than someone who has all of their assets tied into their business and is relying on the sale of that business to fund their retirement. Wow. So it's a scary notion that you could be working all your life, 90% of your net worth is in your business, and you decide I'm going to sell in 2020, and you know all of this happens. What do you do? Yeah. Right? What do you do?
Yeah, no, on that, you know, that's a great point, Robert. You know, I was reading somewhere that, you know, the number on in the Canadian market is about 90%, you know, employment comes from small and medium businesses. So if that's the case, you know, what do you think the health of the, you know, the businesses there in Canada, you know, if the 90% employment coming from the small, medium businesses and only 8-9% is the larger corporations, what do you think the health of the Canadian business market, you know, based on your assessment, what do you think where they are?
Yeah, I think that the small business world will survive. I think there's just a lot of determination in that part of the world for people that really want to control their own destiny, and they're not going to just give up and say, okay, well, I'm going to go work for a big company. That's not going to happen in most of these. Once they've tasted the small business world. That being said, I mean, I do think there are some major issues with the ability for big companies to dominate and crush small people. I think it's dangerous. I think it's dangerous. Like we have Walmart and Home Depot, all the big box stores pushing all the little ones out of business. It's just a dangerous world to live in when you have big people, rich people crushing the small, the middle class, the people that really drive the country, being controlled by a few or the potential to be crushed by a few. So I do think that small business will definitely survive. I think it's going to be interesting. I don't think we've seen the real damage from COVID, and I'm not sure we'll see the real damage from COVID for another year. Wow. There's been a lot of propping up by the government that has kept a lot of businesses that were, you know, otherwise would definitely not make it. They're gonna be the bad business models, the ones that didn't adapt, that didn't have good margins before, didn't have good expense control. All those businesses who may be propped up a little bit by the government support, they're gonna fail. They're gonna fail. And I don't think that's necessarily a bad thing, because those are bad businesses to begin with. It's a shaky business model. So hopefully those people will recover and come back and learn from their mistakes and build a better business on the next go around. But I think it's gonna be over the next 2 years, we're going to see the full impact of COVID. It's going to take some time to work its way out.
I see. So do you see, Robert, from your standpoint, you know, businesses, because they trying to project 2021, you know, everybody's preparing right now, you know, what they gotta get through. You think any people changing their strategies or what revenue stream they want to go around? So do you think a lot of changes are happening? The diversing of product is a one thing, but they're trying to find multiple streams of revenue for the business for survival. And you know, do you see a lot of changes happening in that area?
Absolutely, yeah. I mean, the good business owners, the ones that that acted quickly in the beginning of COVID. The example of the retail shop before with the going online and really examining his business. There's another client I had. She was also in a retail store. She was she was contemplating selling. She wasn't really quite there yet, but she was definitely going through the process. And she did the same thing. She closed down her store. She had been there for 20 years. She closed down her store in the city and went all online. Now she's since opened up another retail space, but she's modified her hours, and she only does sort of by appointment. She does most of her stuff on Instagram. She's modeling her stuff. She's really hustling. I'm super impressed with her, like as a person, as someone who's been really resilient through this. She's going to come out the other end with a much better model that's going to work for her lifestyle. It's going to work for her business. It's just all around a better model for her. And quite honestly, without COVID, I'm not sure it would have happened.
Yeah.
Right. So yeah, I think there are people that are going to continue to innovate, to think about their business model, to adapt to the new realities. But I also think there are going to be people that don't do anything. And I'm seeing it. Like I see business owners who, just have refused to do anything. And those businesses, I think, are going to be looked upon differently when it comes time to sell. When they just look like they took a huge dip, even if they survive the COVID or the aftermath of COVID. I just think they're going to be looked at, as not as good a business as maybe another person who really worked on their model.
Got you. Good stuff. Has a lot of information, Robert. People need to digest a lot of those things. There's so many things to prepare, so many things to care about. People there's never a good time to prepare. It's a long journey. People gotta start preparing for the businesses. Yeah. So somebody's thinking to get some help from you, Robert. How can they contact you? Where can they find you? And how can they work with you?
Yeah, absolutely. So they can contact us at portagemnaadvisory.com. Yeah. That's our website. They can my email is robert.jones@portageadvisory.com. Yeah. And then they can call me directly or text me at 416-624-8871. I know we had a long conversation here about a lot of different topics, and it can seem overwhelming, but it all starts with a conversation. We're a very laid back type of an approach. We go in and we talk to the business owner, and we really try and get an idea of where they stand. And we'll tell them, we'll be honest with them if we don't think their business is ready to go to market, or what changes need to be made in the business before you take it to market. Because to us, our goal is to have a successful outcome for the client. We're not gonna tell them that their business is saleable, waste all their time and energy, take the business to market, and then fail, not sell the business. We don't want to do that. We don't want to put people through that. We'd rather give them the sort of the hard news up front that really we don't think the business is ready for the market, and that if they did a few things, if they want to get to the value that they have in their head, or they want the business to sell, that they're going to have to make a few changes. So it all starts with a conversation. It's a very laid back conversation to get to understand the business a little bit more, get to understand them and their motives. We explain the process that we follow, and if there's a match and there's a fit, then we move forward.
Yeah. No, we send these videos out, Robert, as in an email as well. So I'm going to include a link to your website as well, and your contact information below the video as well. So definitely people can use that information and contact you and see, have a conversation with you.
Yeah. And again, I don't mind if people contact me, just have a question or want some advice, or, it doesn't all have to be related to selling your business tomorrow. It can be any kind of question that I can help with. I'm really happy to do that.
So before we go, Robert, I always say, every time I talk to you, I find that you always have a very high expectation from yourself. You always have a growth mindset, and when I read, I read a couple of books and they said, that builds in a childhood somewhere. So I'm trying to find where did that come from for you? Always trying to excel and trying to have the growth mindset to help people out.
What I think a big part of my childhood was sports, believe it or not. So competitive sports. So I was always trying to get better at sports. I played baseball growing up into university. So just constantly trying to get better and improve was maybe where that comes from in childhood. But, I've found in my professional career that, when you help people, if your goal is to help people, that you're going to be successful, right? There's just no way around it. If you're out looking to help people, if you're out looking to sell a service or a product and that's all you're out to do, it's going to be a tough slog, and it's just not my style. So I enjoy having conversations with people. I mean, people call me all the time. And I talk to them for an hour. These are people that are buying a business. I give them all the advice that I can give them. I will likely never talk to them again. I sort of believe in the in karma. Nice. So as quirky as it may sound, it's to me, it's you're putting energy out there that's good and positive and helpful, and it'll come back to you. Beautiful. So that's sort of my philosophy.
Good stuff. Well, thank you so much for spending time giving all the information, Robert. Definitely, I will encourage people to, have a chat with you, and they'll probably gain tons of value by just having a chat with you, and take it from there wherever it goes, the discussion.
I appreciate the opportunity to chat with you, Gurmeet. Thanks very much. And yes, absolutely, I'm here to help.
All right. Thank you so much, Robert.
Okay. Thanks for me.
Bye-bye.
Good day. Bye-bye.
Bye-bye.